Top stablecoin issuer Tether reports that they've made about $700 million in profit from running the world's largest stablecoin in just the fourth quarter of last year. It's a reminder why we've seen and are likely to continue to see more and more players launching their own versions of some kind of stablecoin, hoping to find similar successes. And that's because the business model behind stablecoins is the stuff that dreams are made of. You give Tether dollars, they give you tokens that can be redeemed for dollars, but which pay no interest and which usually aren't redeemed. But issuers don't typically just keep that money in the bank. Instead, they invest it into supposedly safe assets like U.S. Treasuries. Early last year, with interest rates held at record lows and more than $60 billion in reserves, that gave them a healthy but modest return. But as the year has gone on, and as the Fed has raised the cost of borrowing money dramatically, it's a whole other situation today. 3-month duration U.S. Treasuries are currently paying 4.7% annualized yield, according to Bloomberg this morning. I'll let you guys do the math, but it's a lot. Zach, we've been watching this story for a very long time. What's your take on the latest?
Yeah, I think Tether's trying to project strength, and if these numbers are indeed accurate, they're looking pretty strong, right? They weathered the worst of this storm, the crypto contagion. I think there was some speculation in the market as to whether or not one of the big stablecoin issuers would crumble under the pressure of FTX-related crypto contagion. As yet, that has not happened. Tether is out here projecting strength. Circle seems to be also processing redemptions quite nicely. Paxos even processing redemptions for BUSD, which it partially administers, also holding strong. So I think the resilience, I think, of the stablecoin sector, the centralized stablecoins, I should specify, has been sort of heartening to see. I think in the depths of the craziness in November, December, there was definitely people worried about whether or not these were the next shoes to fall. And so far, that has not come to pass. Whether or not that will happen one day is really, time will only tell. But if they can go through this crunch over the last few months and still come out looking pretty good financially, again, assuming these numbers and these attestations are correct and accurate, then things are looking pretty good from the biggest stablecoin issuers in the world. Will, it's us to you for your thoughts.
Yeah, Tether, baby. Everyone wants to be a bank, and why not with numbers like this? It's great stuff, right? $700 million in revenue is nothing to smirk at all. And that's why you see so many of these different stablecoin projects boot up. Just this morning on CoinDesk, we saw that Aave is launching their own stablecoin, GHO. It's going to be a decentralized stablecoin, so the dynamics are a little bit different, but at the same time, you also make some money. And normally that money does flow into some people's pockets at the end of the day, even if it is a DAO. And so I think this just brings me back to last year, right, with the Terra Luna debacle. Why did that happen? Well, people wanted a decentralized stablecoin. That really is the dream of crypto. Bitcoin is great, but what if we had decentralized money that maintained its value? That's what people are chasing after. Tether seems to be the only long-term bet on that. And the only reason it's decentralized is because it has its bank offshore, off the United States' guidance, right? So I think that's the thing to really watch here, is to see if people look at these numbers and they're like, let's boot up Terra Luna 2.0, let's print more money, baby. Let's keep this thing rocking and rolling. I don't know if that's going to happen again until we have another bull run, but it's definitely like a profitable business line. Jen, to you.
Yeah, yesterday we spoke about Binance, who really suffered at the hands of regulators over the year, but seem to have really made it on top. They're forming coalitions, they're doing the thing for the industry. For me, Tether is a nice parallel to that story. Tether was really under a lot of regulatory scrutiny for a long time, and people weren't sure what was going to happen with Tether. And here we have them doing what they say they're going to do and coming out on top despite all of the contagion that's happening in the rest of the industry, assuming that their numbers are correct. I think this is great. They set targets out last year to get rid of some of these short-term papers. They set a bunch of targets out last year, and it looks like they're tracking towards those. So I love to see it in an industry that sets a lot of milestones and targets, and very few projects actually deliver on those. Will, I'll kick it back to you.
Yeah, one more thought on this before we go to the next topic with you, Jen. One fact check, I said revenue is actually $700 million in profit. The thing with stablecoins that's really interesting is that they're like anti-cyclical and they're pro-cyclical, right? So like during a market, they do really well. Like during a bull market, like everyone's using them, a lot of outstanding Tether, like the market cap grows. But then during a bear market, like you said, Adam, like the cost of money goes up, and so they just print more money because they have on the backside these U.S. Treasuries that are paying them interest. So it's a weird business model. It's kind of really the honey badger of crypto in a way. Like this thing will not go away because it always makes money somehow. Back to you, Adam.
Yeah, I think that that's a great place to kind of end on here. When we're talking about the different types of stable coins, there are a lot of different incentive mixes that you find out there. The ones that have been getting in trouble over the last, really since the beginning, are the ones that are algorithmic, typically pegged to tokens, sometimes under collateralized, usually poorly collateralized. The better collateralized ones tend to survive. And they're the incentive, like there's no reserves that are being held by the company. And so their incentive is to maximize use, but not really in the same way that Tether has going on. A company like Tether, a company like Circle's USDC, anybody whose business model actually involves them issuing a token but holding the cash themselves, again, like they basically get to print money for themselves using other people's money, and that's okay. So they would have to go into like hyper greed mode, right? Where it's like, I'm not making enough money, $900 million isn't enough here. Instead, I need to start investing money, in risky ways. And I think that we've actually seen that as time has gone on over the course of the last couple of years, and as more transparency and competition has come into this market, the centralized players have actually cleaned up their mix a lot. Now, whether you trust US Treasuries over the long term as something that is a riskless return, different question. But at least based on kind of the reality that we live in today and how the mainstream looks at it, these just look like they're the version that makes sense, even if people would like to not have to rely on one of these companies. At least the incentive mix seems to be right.